everybody. Happy Wednesday. I am very excited to have just a very special guest with us today. One of the things on everybody's mind this time of year is property taxes. And certainly when we talk about the benefits of investing in North Texas and what that opportunity allows, one of the big things that people ask me is how do you make things cash flow and how do you have a great return when you're a state that has property taxes? And of course, the first thing we talk about is no state income tax and a lot of different paths that we go down. But one of my purposes of doing today is to help you understand how property taxes work, what's happening in the legislature about property taxes, and more importantly, what you can do to get your property tax bill down and how you can start a process that over the duration of you owning a property, whether you live here, whether you invest here, to keep your value as low as possible and what that process looks like. So very excited to have the Collin County Tax Assessor Collector here, Scott Grigg. I'm very thankful to call him my friend, and I obviously thank him for being here today. Before I introduce him formally, I want to remind you that we've got a great webinar coming up on May 28th, Spending Too Much on Your Rental. Here's what it should cost. We're going to talk about expenses and how to help manage those expenses when you have a rental property, and also do a kind of comparison between pre-owned properties, new properties, and one of the reasons why we really focus on and push new construction from a cost perspective and income perspective. After that, we're going to have double your portfolio over and over, what investors get wrong and how you can get it right. And then a year in the life of a rental owner, unlocking the secrets to consistent profit. As always, you can visit our YouTube after the fact to watch any of our previous webinars or any of our YouTube or podcast channels. And I also want to let you know we have an upcoming property tour. As most of you know, we're doing those twice a month, but of course we do private tours Monday through Friday on the OmniKey side as well. But this property tour is upcoming, so if you want to attend that, you can use this QR code or reach out to the team or visit our website to register. Our next live meetup in North Texas is going to be May 29th from 5 to 7. We're going back to Neon Cactus. Every time we do it there, everybody just loves the food and the private environment. So hopefully you'll be able to make it there. Michael and I will both be there, and it's just a great time to mix and mingle. There's no sales pitch. There's no big talk. It's just a bunch of like-minded people understanding the power of real estate, getting together to talk about the things that we're passionate about. And of course, for Michael and I, real estate is at the top of that list. I also want to invite you to IMN. They're going to have their Middle Market Multifamily Forum May 15th and 16th. Michael and I are both moderating leading panels on the 15th. So Michael will be first talking about renovation, rehab, and construction. And then I'll follow after that. We would love to have you there. IMN is a fantastic educational event. If you're in the multifamily space, this is a wonderful way to get a lot of connections, meet other people, and also just learn a lot about what's happening, how people are navigating the multifamily world right now. As most of you know, we are not actively involved in doing a lot of multifamily anymore because of the opportunity that we see on the single family side, but we still manage it. We still know all of the ins and outs of that, and it's just a great way to talk about some of the diversification that can come with different opportunities and different ways of handling multifamily real estate. I also want to encourage you to join our mailing list. It's the best way to stay up to date on upcoming events and things that we have going on, exclusive deals on our masterminds and consult calls, in-person events, and also it will remind you about our webinars and other media happenings, and of course, up to date on market information with our newsletter as well. Before I begin, everything that we're going to talk about today is based on my years of experience and best judgment, not only as a real estate investor and educator, but as a real estate agent and property manager. Today, we have a fantastic guest, Scott Grigg. He's going to be talking about property taxes, about laws in the state of Texas, how things work. But I want to remind you, he is not a CPA, he's not an attorney, and he's not giving you legal tax advice. Those are the types of questions and things that you want to go to the experts in your life for. Of course, my job is to be one tool in that toolbox, but to also connect you with other people who can help you on your journey. Scott is one of those people. He's a good person. He's here to give you great information. But of course, you want to make sure that you use that information with your people in your life to make sure that it is the right fit for you and for your investment model. So without further ado, let's get started. We're going to talk about tackling taxes and what things look like right now in Texas and what you can be doing to protect yourself. For those of you that haven't heard us before, my name is Leah Slaughter. I am a high volume real estate investor. I have about a $48 million real estate portfolio across North Texas, Oklahoma, and Florida. I own multiple businesses, all are real estate adjacent in one form or fashion. I speak all over the US at events, on stages, and news, talking about our unique approach to real estate investing, property management, and just real estate in general. Michael and I are middle school sweethearts, both born and raised here in North Texas. We have 4 adopted children, and we are very involved in what goes on here locally and at the state level to make sure that we are bringing you the most up-to-date information to help you be successful in what you are doing. Our guest today is Scott Gregg. He is the current Collin County Tax Assessor Collector for Collin County. He was a certified fraud examiner and has more than 35 years experience in both finance and accounting as well as auditing. He's had lots of roles within Collin County since 2013, including a legal clerk as well as an internal auditor. And he has lots of certifications at both the state and federal levels. Scott, I want to thank you so much for being here today.
Thank you for having me.
So what our goal is today is to teach you practical tips to lower your property tax bill and avoid overpaying not only this year, but also beyond. We want to talk about the latest updates on local, state, and federal tax policies that might impact you as a property owner, whether it's for your personal home or an investment property. Give you some tips on how you can successfully protest your property taxes and make your case effectively. And then at the end, we'll have an opportunity for a live Q&A. You don't have to wait for the end to submit your questions. Just know that we're going to do all of those at the end of this webinar. So Scott, I'm going to give it to you to take away. And again, thank you so much for being here.
Well, once again, I appreciate the opportunity to come out here. We have here in Texas, we don't have the income tax, but so we had to find a way to fund our different roads and all the things that the government does. Everybody likes to have those services, so property tax is the way that we fund most of those here in Texas. So one of the things that I wanted to do as tax collectors, make sure I had a clear understanding of how the process works and not just send you a bill and take the money. So that's how I got a lot of those certifications that Leah talked about. So, most of it is done at the legislature. The tax code is a pretty thick book. I have it sitting on my desk. I'm looking at it right now. I tell people all the time, if you have trouble sleeping, I'll loan you my copy. But over the years, the system has changed. If you've come from a state where the tax office kind of does everything, it's separated here in Texas. The appraisals are done by the Central Appraisal District. That is changed back in the 80s, early 80s. Prior to that, every taxing entity did their own appraisals. The Central Appraisal District sets the values for all properties in the county. Then they send those values out. Those come out middle of April, and that's one reason why this subject is on everybody's mind, because we just got those. And after you picked yourself off the floor, after you saw the value there, then it's time to start looking at whether you want to protest. We have 30 days to do that protest, to file that protest. So we're about 8 days away from that deadline. And as values have risen, a lot of the taxing entities have been able to just kind of keep the tax rate level and been able to say, well, I didn't raise your tax rate, so therefore you can't blame me. But not lowering the tax rate is just as much to blame as raising taxes. So I'm trying to educate people there, and that's kind of where our overall tax system in a nutshell has worked over the years. So right now we're really looking, a lot of people concentrating on whether they want to protest that appraisal value they got and how do they go about doing it. So
Yeah, I am always a proponent of protesting, and we typically use third-party services for that. And we're going to talk a little bit about that later. But one of the great things about using those services is they only take a percentage of what they save you, especially if you're using the right ones that we recommend. And so you really have nothing to lose. And what we find, and Scott, feel free to interject, but what we find is if you protest it every year, generally your overall assessment is going to be lower than if you didn't protest at all.
By protesting every year, you kind of keep that base lower. If you don't protest, then the base gets higher and higher. And for a homestead property, your personal property, they're limited to only 10%. So the lower you keep that base, the lower that tax they can go on that 10%. So
Yeah, I've been real happy this year. I'm actually sitting here looking at one that I just opened while we were getting ready for this webinar on my desk, and they dropped the value on one of my properties about 9,000. In reality, it's still way below what actual value is, which again is one of the benefits of doing new construction and rehab. Often there's this lag where it doesn't catch up. But I haven't seen really aggressive property tax increases this year, and I'm hoping that's going to continue. If you look at this chart here, what you will see is that beyond just what we're talking about here at the local level, when we look state by state across the entire country, you will see that Texas has one of the lowest tax burdens in the entire country. There's actually only a couple of states that are equal to or lower than us. And so as much as we talk about property taxes and protesting them to try to keep money in your pocket, at the end of the day, we're very, very fortunate to be in Texas where the overall tax burden by state, we are one of the lowest. So, Scott, let's talk a little bit about the property tax rate compression bill that went through August of 2023. And then I want to talk about what's happening right now in our Texas legislature, because there's some real promising things upcoming, hopefully for more property tax relief as well.
back in 2023, one of the big things that got passed is we had a surplus from a lot of that from sales tax, and that just had to do with the economy being so great in Texas. We hear a lot about businesses moving in, and that helped generate a big surplus in Texas. And they used a big chunk of that, over 18 billion in there. And when you hear the term compressing, just kind of put it in layman terms, is what they did on that is they limited how much our schools could collect in local property tax and replace that with state funding. So a lot of our school taxes are a big chunk, often over half of what our property taxes are, and they limited that. So a lot of property taxes went down. They also raised the exemptions at the same time, which really helped our seniors. So those people who've owned their homes for many years and are now in their, over 65, they're retired on limited budgets. That really helped that segment of our population. So I was really glad to see that. This year, they're also looking at similar raising that exemption, um, adding an additional exemption for the over 65 and the disabled. Again, really trying to focus on helping those with limited income on a fixed budget, which I'm a big proponent of. Those people who, they've paid their share. They've been paying into the system for many, many years. So we're not there. We've got a big surplus again, just from a big surplus, being so successful on our economy here. It, it sounds funny to think that our economy in our state rivals many of the nations around the world. So, and I mentioned before that this whole process starts in Austin. And so we start in Austin and we get those things done. And a lot of these changes can make lasting impacts. What happened in 23 was able to actually get rid of the school taxes for many of the seniors moving forward. So
Yeah, it's pretty incredible. And this was the first time that we saw property tax benefits passed down to investors. And that's something that we haven't seen before. We've seen homestead exemptions change and other things, but this was the first time we saw a rate compression package from that school tax go towards investment properties. And to kind of give you numbers of what we're looking at, they are projecting, when we did this package, we had about a $33 billion surplus, $33 billion in the state of Texas. And to put that into numbers, Texas is in the top 10 largest economies in the entire world if it were its own sovereign nation. So absolutely incredible GDP and numbers that are happening here in Texas. But our surplus in that 1 year was about $33 billion. So they did that property tax rate compression and other package, and they are now estimating our surplus still remains at $23.8 billion in the state of Texas. Absolutely incredible.
absolutely, when you talk about the businesses, one of the reasons they really push that is because those who were renting, it wasn't helping their cost of living. You know, um, they were still struggling to make meet, and rent was going up because as investors, people had to raise rents because they still had bills to pay themselves. So I was glad to see that, and I hope they continue to kind of go down that road of helping um, those investors be able to keep their costs low, which also will help the rent of those people. So.
Yeah, I think unfortunately, rents continue to rise, and so that really hasn't happened. But what it did do is give some relief to investors, where I think that what we saw 2 years ago and 3 years ago was investors were being forced to sell properties or do massive increases that probably weren't market correct to try to cover the increase in property taxes. And what I tell people is when you own in these inner cities and you're not turning over your property like we teach, every year you've got this disparagement in your income because rents are going up at a slower rate than what property values are. I mean, even at a slower year of 5 or 6% appreciation, rents are still going up at only about 2 to 3%. 2.8 is about the average we've seen over my 20-year or so career. So there's this 2 to 3% disparagement. And in the busy years where values were going up 20, 30% and rents were not, it put investors in a bad situation because they're not following that model of turning over property and going back in, and especially in those inner cities. And so what I tell people is when your property tax bill is going up, that's actually a really good thing because that means all that extra equity, you've made that's your income, and that far exceeds cash flow. Cash flow is great, it's important, but it's that increase in value that gives all of us Americans that own property our biggest asset typically that we will have in our life. And so it's just hard to trickle that down to renters, very hard to trickle that down. So I've heard discussion of there being deductions for renters. I know Trump has certainly spoken about that from an IRS perspective. It'll be interesting to see what we do because unlike when I started in this industry and many of you started investing, we no longer have 70% of our country that owns property. In fact, in Dallas, for example, Dallas County, it's about 59% of people rent. And in most of the suburbs where we operate, it's about 50 to 51%. So questionably, half of our country is renters now. Very, very different than when we were all growing up. And it's not because they can't buy, it's because they don't want to. In many cases, they don't want that responsibility. They don't want that commitment. We have a much more nomadic younger generation. You've got something like 60% of children still being supported by their parents after the age of 21, getting some type of financial support. It's a very different world than what we all grew up in, I think. So when we talk about rate compression, this just kind of gives you an idea of what that looks like. So if we had a tax rate of $1 per 100 of property value and your home was worth say 300,000, you would pay 3,000 in property tax. And with the rate compression, what it could look like is let's say 10 cents per 100. What you would pay is now 2,700 and the state would now pay 300. So this is what they took that surplus to do, and this is how it affected your property tax bill. A lot of people, there was a misconception that it was actually cutting money to the schools, and that's not true. The schools were still getting the same amount of money, but they compressed that rate by buying it down out of the surplus. And these changes have shifted funding, and you can kind of see how this has looked. When you look at the blue, we're looking at what local, and red, we're looking at state. And so this kind of gives you an idea of how that shifted. And you can see from 23 to 24, this complete inversion of what that looks like and where the funding is coming from. And this is further complicated by what's happening right now with the school choice voucher program. If you haven't been following what's happening in Texas with that, I definitely recommend you do so. We'll probably add a webinar on that just to help people understand what that's going to do for education here in Texas. And I'm not going to take a stance either way because this is not the appropriate venue for that. But what I do want to do is teach you about what that's going to change in both our public schools and in our private offerings. And so I'll have Eric add that onto schedule so we can talk through that as well. Scott, what I would love to have you talk about is what we see at the kind of local level and what taxes look like at those levels. And obviously you're in Collin County, but there's a lot of counties that are in this area and certainly that we work and invest in. And so in general terms, I guess let's talk a little bit about property taxes and who's responsible for them and where those rates come from and kind of what that looks like.
So locally, we're continuing to see our taxes go up. For a long time, the schools would go up, the cities would go up. our county had done a very good job, and so had our community college, of keeping them kind of flat and not going up. But they were really benefiting because of the growth of the cities. As the cities grew up, we have some of the fastest growing cities, not just in the state, but in the nation. Cities like Wiley and Salina, and I'm going to Salina recently, and I think they got half of the orange cones in the state of Texas up there. Uh, as you go up there, but as the needs go up, we here at the county level, there were certain needs. Unfortunately, as populations grow, you need more jail space, you need more roads. It costs more to build the roads. Um, and it takes money. And as the inflation goes up and cost of all these things go up, you can't keep the taxes down forever. They do a pretty good job of trying to do that, but a lot of it comes down to budgeting. Um, I like the approach of the county and some of the others. They do a budget process of, this is how much money we have if we don't raise taxes, and they try their best to try to stay to that. Other taxing entities, they do a more of what do we need, what do we want, and then they set their tax rate to get to that level. To put it like in our local, at home, our boss tells us this is how much money we're going to make, and we set our budget accordingly. Other people, other taxing entities, they do it more along the lines of, okay, this is what our budget is, but then we decide we don't want the Toyota anymore, we want the Mercedes. So then we go back to our boss and say, no, this ain't going to work. You're going to have to give me a raise. And that's what some of the cities and schools have done in the past, where they just go to the taxpayers and say, we need that raise. So the appraisal, it starts with the appraisal district, and everybody likes to point fingers. When people complain about their taxes going up, naturally the cities and the schools, they want to point their finger at the appraisal district. The appraisal district naturally wants to point their fingers back at the others. I'm not trying to defend either one of them. I think that sometimes our appraisal district gets it wrong. They set the property values too high on some aspects. But the one thing I will say, the appraisal districts, when they set the values, they don't know what the tax rates are. When the tax rates are set, they do know what the appraisal values are, and they do know exactly where they need to come in with a tax rate not to raise taxes. And if they choose to go above that rate, they know when they set it that they will be raising taxes. So for them to tell you that they don't is not exactly true. And they like to play with words. Well, we haven't raised your tax rate in 10 years. That can be a true statement, and you can not raise your tax rate and still raise taxes, because as the property value goes up, it's like any like a scale. If you look at it as a scale, as one side goes up, if the other side doesn't adjust accordingly, it will come out of balance.
So this is a good segue into, for those of you that don't know, Michael's actually running for Precinct 2 County Commissioner. And this is really what led him to run, because what's happening at the county level is not a zero-based budget. And what that means is that when the county goes in for budgeting, they're starting at the old budget and working forward, instead of going back to a $0 budget and building the budget. And so you'll hear a lot of talk about, well, Collin County hasn't raised the tax rate. But like you said, Scott, property values have skyrocketed. The county has more money coming in than ever before. And not raising the tax rate doesn't actually mean your property taxes haven't gone up. In fact, they've gone up significantly. And so this is a very, very important thing right now, because when rates come down, I believe our market's going to go insane again. I'm banking on that. We've been banking on that for a very long time. When we look at last year, for example, the budget raised property taxes more than the previous year's budget by $31,610,821. So that's about 10.73%. Of that, 13.8 million is tax revenue raised from new property added to the tax roll this year. So what that means is about $19 million was from your pockets as Collin County homeowners, and not just investors, but homeowners as well. And so this whole mentality that we just keep adding on the budget has got to stop. And people have to understand that the tax rate is not what determines your tax bill. It's the tax rate in conjunction with your assessment. And that's something that is really important to us, and certainly as business owners here as well. So if you want to learn more about what he's doing and why he's running, I'd love for you to do so. Certainly, I think a lot of us want to be more involved these days. Whatever side of the podium you're on, I think one thing that has happened from the last couple election cycles is a lot of us are more involved than we ever were before. And Scott, you and we have been involved for a long time, but we're seeing a lot more people want to step up and get involved. And one of the best ways that you can do that as a consumer and as a taxpayer is to get educated and just make sure you understand the lingo that's coming, not just if you live here, even if you're in California, New York, wherever, understand the lingo that they're using, because they say a lot of things in government to make it sound like they're doing good things. And sometimes when you really dive into it, it's not quite what it looks like. So I know for a fact we all want to see property taxes come down. Scott, you own in Collin County, we own in Collin County, and that's going to take more than just dealing with protests on assessments. But that's a much broader conversation for another day.
Yeah.
So, oh, go ahead.
Well, I was just saying, you talk about the increase in taxes. In fiscal year 2021, this office collected $3.4 billion. Last so far this year, in just a 6-month period, we've collected $4.3 billion. So we're just under $1 billion higher in just a 5-year period of property taxes just within the county. So
Yeah, when we look in Collin County in 2021, the budget was like 384 million in this tax. And when we look at 2025 adopted, we're now at 531, almost 532 million. So that's about a 13% increase in 5 years. So it's capital expenditures are pretty high right now. So let's focus on what we can do with our tax bill that we just got and how we work on reducing that, but then also understanding the purpose of local government and the local election in terms of the taxes that you pay and how we stay up to date on that. So when we talk about protesting and when we talk about trying to get your value as low as possible, one of the things that our customers see a lot are this land only value at initial build, because about 95% of what we do or more is new construction. And one of the things that we love about that is if the property is built in April or May, you're not paying a property tax bill that year for more than land value. So there's a lot of extra value that first year. Or if you've owned a property for many, many years, you are at a point where hopefully your property tax value is still below what actual value is, but the protest process is what helps keep that base lower, as you mentioned. So the real question you should ask yourself is, why should you be protesting your taxes? If your property is overvalued, you're paying more tax than what might be necessary, and a lot of people don't realize it. Protesting is a legal right that you have, and a pretty straightforward, easy process that can save you a lot of money. Even a small reduction in value can produce meaningful long-term tax savings, especially when you save a little bit every single year and it continues to compound. So when we looked at some research, the National Bureau of Economic Research worked with the UT Dallas and had 2 findings from their report. They estimated that more than half of all property tax protests in Texas were successful. And Scott, I'd love to hear if that's kind of what you've heard from people that you're working with as well, but that also successful property tax protests resulted in an average savings of about $600 per property for the person who protested.
I think that about what I'm hearing. As far about half of them, if you count their initial offer.
Yeah, yeah, and $600 is a lot of money. When your average property tax bill is $5,000 to $7,000, you're talking over 10% or right around 10%. So it's pretty significant. And this is why we always recommend that you protest every single year. And Scott, talk a little bit about some of the other benefits of protesting taxes, because I think a lot of people don't do it because they think it's very complicated and difficult, and that you're not going to have good success, which we've already kind of indicated that it's about 50% success rate here. But what do you see as the benefits of really doing this protest long term?
Well, I think one of the things that a lot of people don't even think about is the accountability. I think it kind of holds our appraisal districts accountable. Um, I think that it gives them a little bit of thought as they reset these values, knowing that people are going to be protesting and that people are actually looking at them. I think it's just kind of human nature that if you know people are looking at what you're doing, you're going to make sure you're doing it right. So I think holding them accountable is something that is a good reason to try to get in there and do those protests. And I guess the old saying is, if you're not part of the solution, you're part of the problem. If you're going to um, complain about it, try to do what you can to point, get in there and be part of the solution, to hold them accountable. And things. Your property better than anybody. The appraisal is done on a mass appraisal system. It's not an individual house by house or property by property thing, and they just don't have the time or the manpower or the resources to do that every single year. So I think it's important that we get in there and, um, like I said, hold them accountable. As long as we're in there organizing, it's not a costly thing. It does take some of your time, and we see them every year, and I think we're close to 80,000 here just in Collin County alone will protest any given year, and that number seems to get bigger every year. So, and anything you can do, we've already talked about lowering that base every year, and, any money you can put back in your pocket is a good thing. So.
Totally agree. Totally agree. So everyone's got their protest or their assessment notices in. I'm still missing a few, which I'm going to have to go pull them online. So just don't assume that it's going to come in the mail and you don't need to be double checking to make sure you get it. Obviously, I probably have a higher loss number than most people because I've got hundreds of properties that I'm getting notices for. But you want to make sure that you're setting yourself a reminder every year for, I would say, like April 1st, to make sure you get your notice and make sure that you decide what you're doing about your protest, whether you're doing it yourself, whether you're engaging a company. That way, in case you don't get it by mail, maybe you moved, maybe you have an alternate mailing address, something that you can go pull that. And so once you get that, what you should start looking at is what you're going to do next. So, Scott, where do you recommend a consumer start once they get that notice?
Once you get your notice, where I always have them start is just to look at the notice itself and make sure it's accurate. If this is your personal home, make sure your exemptions are there. Your homestead exemptions there, your over 65 exemptions there. We've had some issues this year, especially because of a law change where they were supposed to be verifying exemptions, but some exemptions got taken away because they didn't get hear back from the homeowners to verify that they were still there, and some exemptions got taken away in error. So make sure those exemptions are there. Check things like, is it the right taxing entities? I've seen that happen where the entities weren't correct. Even some things like square footage might be wrong. You'll have to go online to kind of check on that. But just the simple things can be wrong. Check that to begin with, and that's where I would start. Then make the decision. There's these companies. If you're going to do it um, yourself, even if you are going to do it yourself, you might check with some of these companies, and they'll tell you right off the bat whether you're a good candidate or not. Because if they don't think they can save you money, they're not they're not going to take it. If they don't think they can save you money, if the experts can't save you money, odds are you're probably not going to be able to do it either. So you know, start making a list. If you are a good candidate, you're going to do this. It's time to start making a list. What repairs need to be made, taking photos, being organized. The worst thing you can do is go in this meeting to be unorganized, And just don't walk in there like you with a whole box of photos and receipts and unorganized and basically dump it on their desk and say, okay, here's the reason why I think you guys messed up. Also go in there with the right attitude. Don't go in there that confrontational. You put them on the defense and they're not going to listen to you. It's just human nature. So be organized, go in there with the right attitude, present your documents. If you need questions on how the system works, they post those rules online and you can read that. Everybody follows the same rules. You're going to present your case, they're going to present theirs. Also, call the CAD, find out what their uh, comparables are. And that's something they have to give you. See what they're looking at. So you have an idea of what they're comparing your property to. So that you can, that's part of your defense. If they're comparing your property to things, to homes that you don't feel is really comparable, you can use that in your presentation. So I tell people that when they're doing their personal home, um, our homes were invested, not only financially, but emotionally. And we have to kind of disengage from that and not look at it through those eyes, but look at it more as an investment. And we don't look at those marks on the door where we kept track of how tall Junior was getting, but look at that as a repair that needs to be made instead. So we kind of have to look at it from a different angle there. So it goes from being the Taj Mahal and the apple of our eye to being the biggest dump on the block when we're when we're coming to a protest. So, um, like I said, it's just a different mindset, but we just got to go into it with the right attitude. And well over half the ones that go into it with the right attitude and well organized that I've talked to, um, there is exceptions to the rules. Some people are just never going to admit that they're wrong, but they come out with something and some kind of savings.
Right. And the deadline for protesting is May 15th. So if you're planning to do this yourself, you can do it online or you can do it by mail. But I would recommend at this point you do it online because even if you overnight it or something, it's too close for comfort. What does the process look like to protest that online, Scott?
There's if you've got your notice, there's a code on there. If you didn't get yours on notice, you're going to have to contact the appraisal district and get that code. It's an e-file code that goes with that. Uh, but if you haven't got your notice in the mail, all those were mailed on April 15th. So if you're going to have to get that information online, like Leah talked about, um, please get with the CAD, contact them, get that because if you it's a little late to do it on mail. They have to go by the postmark date, but it's still going to be a problem. You either need to do it online, or you're going to have to stop by and hand it in in, on per, in person there on El Dorado. So uh, get that in there. You have like 7 days to download your evidence if you need to. Uh, if you don't, but at the very least, get the form filled out uh, and get that. At least put them on notice that you're planning to protest. So
Yeah, totally agree. And while I think we both have seen countless self protests work out, you can make things a little bit easier by hiring an expert to do that for you. You certainly don't have to, but that is what I recommend. We have been using Texas Tax Protest for many years, and I don't get any kickback or benefit or anything by giving you their name. I want to be clear. I'm only recommending them because they do a good job. And for our clients, they offer a discounted rate and only a percentage of what they save. I believe that percentage is 30%. I'm pretty confident in that number, but you'll want to talk to them about that. But say that they save you $100, your fee is going to be 30. But if they save you $0, you have no cost for engaging them. So that is something I definitely recommend. Oh, here you go. Yeah, so the fee is 30% contingency of the property tax savings. So whether you do it yourself if you're here local and you feel comfortable doing that, whether you hire a company, either way, we absolutely recommend hiring a company or doing it yourself. What matters and what's important is that you protest, not which way you do it. But at the end of the day, you can't beat free when it comes to protesting. And whether you do it yourself or pay a percentage of savings, you really don't have anything to lose except a little bit of time. So Scott, before we jump into Q&A, is there anything else you want to add?
No, I was just about to say if you had to do things online, or if you're missing some kind of number, if you're having trouble doing the filing online, um, shoot my office an email. Most of it um, comes to my email box. I will forward it over to the CAD and say, hey, could you please get this information to the taxpayer. So far, we've had pretty good luck with once I send it over there, they get it over there. They know that time is of the essence, especially now. Just a little over a week out. Getting that over there. So I've got a good team. They know when I'm busy because the busier I am, the more emails I forward to them. So otherwise, I
My
try
team
to.
has that same problem.
Yeah, yeah. If they're not getting many emails, they know that I have a little more time to respond to the emails. But You can go on the county's website and find my page, my tax assessor at collincountytx.gov. Comes directly to my inbox. Um, Pops up on one of the phones I always carry around with me, or if I'm in the office. But like I said, if you're having trouble getting those, or if you're like Leah and you've got properties that you own and you haven't seen that notice yet, then go online and look at the value and you decide that's something you want to protest. Like I said, I know there's an e-file number that's on that protest that's asked in that form that you'll need, and I'll forward it over to the email address I have at the CAD. That I don't know that it gets any answered any faster, but I do know that it does get answered. So
So I've got some great questions here. Let's start with this one. This one's a bit more difficult, so we'll start there. So Christine says, I've heard that counties sometimes cherry pick the highest comps to justify increasing appraised values. What safeguards do you have to ensure valuations are fair and not padded?
from a homeowner standpoint, um, you get to pick. You can also come in with your own comps to support that. You're probably, if that's not what they're supposed to do. Um, I've heard some things this year that um, there are times that kind of concern me. Someone kicked out because it wasn't the same builder. I never heard that argument before, but the code is, what is the market value with comparable properties? That's what it says. Um, so you come in, the ARB, their job is to be a fair, impartial um, party. It's a three-person panel. You present your case, and your goal is to get two of them to see the truth and see the logic behind your argument. I can't guarantee you that you will get there, but in general, if you use a real estate professional that gives you three, I always suggest get at least four comps. That way, if they do decide to throw one of them out, at least you got uh, an extra one to back you up. But I don't know that here in Collin, I haven't seen a lot of examples or a lot of them quote cherry picking. I just don't know that they have the time or the resources to do so.
Yeah, I would agree with that. I've heard some horror stories coming out of some other areas. I've read some articles and things about what's happened in Denton County, and so I think sometimes it's very different local area as well. So here's the next one. How many hours does it take to complete the protesting process in total per property? And how many hours does it take to set up the protesting process through a third party protest company? I will answer the third party part. It's very simple. You're going to sign a DocuSign with them to engage them, give them a couple details about your property, and that's about the end of it. In terms of the protesting process for you to do it yourself, Scott, can you talk a little bit about how that process works?
As far as applying for the protest, that in itself is not a long process. You get online. There's a code right there on your notice um, that you get online, you fill out the form. They're going to ask you particulars on your property. Most of it kind of autofills when you, based on that code as far as your property. They're going to ask you what you think your property's worth. It's going to give you a chance to download your um, evidence. I think that as far as the time goes, a lot of it depends on how much evidence you have and what you need to present. If your evidence is you got a lot of repairs, and it's going to take a lot of pictures. When it comes to repairs, and one of the things I failed to mention before is if your your protest is based on a lot of repairs, you need to get written estimates on how much these repairs are going to cost, or the upgrades are going to cost. You, they're not going to take your word for it. Doesn't mean you're going to have to get the repairs done. Doesn't mean you're going to have to do the upgrades, but you need written repairs. So it will take you some time to schedule those repair guys to come out, look at your house, give you written estimates, and so from that aspect, it's going to take some of your time, and that's kind of where some of these professional services can help you out, because they've got a lot more resources in there, and they can uh, help you get some of these things. They may need you to help provide some pictures and things like that, but they don't have access to your house the way you do. But it depends on how just and that's another thing to take in consideration, whether you're going to use a professional or not. How much is your time worth? So,
Yep. That's a very similar question that people ask us and we talk about as it pertains to having a property manager. It's how do you value your time?
so
So we got another question. With the current economic situations going on at federal level with tariffs, et cetera, are there any potential impacts on property taxes at a state or local level?
I think maybe an indirect level, maybe just because of the cost of goods and the cost of things that um, of what it costs us to provide the government to provide the services that we're providing. I don't know that I can think of a direct relation, a direct impact. Just maybe
Yeah.
just cost of just like it cost us our own personal budgets a little more to do some of the stuff that we do at home. It's going to, it be the same thing with our government.
Yeah. So here's another one. Can you give us a number value of what property taxes should look like for a $600,000 home in Plano? Or are there too many factors to determine that without a protest?
There's a lot of factors on that. Um, for one, what kind of exemptions you might have. I will tell you that the city you picked is a city that, if you're over 65, it's kind of a good thing because Plano is one of the few big cities that offers a freeze. So, say if you're 75 or above, your tax liability has been frozen for a while now. So, as your property values has gone up, your tax liability has not. So that's a good thing. Um, but there's one of the things that we talked about, and um, Leah mentioned a little bit about local elections. I'll tell you the first thing I tell people, what can I do to lower my property taxes? I'll tell you the first thing you can do is get out and vote. Our local elections that just recently passed, um, the city councils and the school boards are the people who set your property tax rates. And if we don't get the right people on those boards that are good stewards of our money, budget right, start with zero based budgeting, and don't aren't wasteful, then our taxes are going to keep going up. So that's the first thing we can do. Here in Collin County, uh, like what 11% of the people voted. So 1 out of 10 people made the decisions on how our money is going to be spent here in Collin County in this last election. So that's the
Yeah.
first thing that we can do. As far as the calculation on a property tax in Plano with Plano ISD being the bulk of that, um, there's a lot of different factors. I will tell you that something that I do offer is if you get me your particular property, I'll be more than happy to give you that calculation.
One thing that I always like to tell people is look up what your tax rate is for your property. You can look at previous year's bills or look at properties around you because the things that are going to make up your tax bill is the same as your neighbor, minus your individual deductions and things that you might have like exemptions. One thing I will mention about Plano specifically, since you brought this up, Plano did some massive budget increases this past year. It made actual national news in some instances. The new budget that they adopted end of 2024 raised property taxes in Plano by almost $19 million or 7.92%. Of that, just about 3.7 million was new properties added to the tax rolls this year. So that means that your taxes in Plano went up more than $15 million from their new adopted budget. So again, the commentary on that's for a different day, but this is why so many of us are getting involved and trying to be a more active voice because, as Scott said, it is a very small number of people making the decision of who actually serves on these councils and just different local offices. And that is because people generally don't show up for municipal elections. And municipal elections are nonpartisan, meaning you don't really know what side people are on. And so sometimes it's very hard to know how they're going to vote. So this goes back to, when we are recommending areas to invest in, we are keeping an eye on and watching what's happening in these local markets. But when we talk about why we often don't recommend avoiding in these big, expensive inner cities, these are the types of trends that we're seeing in those areas. So Plano, again, had a net increase of over $15 million for the budget that the council just did in September of last year. Okay, next question. I received two notices for my property in Collin County. One has Collin County MUD as the taxing unit, and the amounts of both notices are different. Is that to be expected, and what does that mean?
Okay, you are one of those people that are in the utility district. Um, because of the way that the utility district came online afterwards, you did get two bills. So the one of your bills probably had your city, your school, the county, and the Collin College, and the other one had the utility district. So that is the reason why you got two different bills. The utility district came on later. Utility districts are a taxing entity that kind of got set up that typically it's just that the city is not wasn't quite ready to provide all of the services that the developer needed to move forward. So they set those utility districts up. Right now, this office collects for a lot of utility districts. That they are valid. Both um, tax bills are valid. Please make sure you pay both of them because I do have people that paid one of them, didn't pay both of them, and then wondered why they had to pay penalties and interest on the other one. So that's the reason why I do want to try to look into our software and figure out what we can do to try to put all five of those lines on one property tax bill moving forward. But I think it was more of a software issue, and I'm not sure if our software can handle putting them all on one or not. But I'm working on it. So.
And one thing to keep in mind is depending on where you own property, Collin County, most of the time, everything's in one place. But like if you're in Dallas County, you're going to have typically more than one bill because not always are all of the different parts of the tax bill billing together. So don't be surprised if you have property in Dallas County like Mesquite or Garland or any of those areas where you might have more than one bill. It's the total of those bills that creates your entire tax bill. Okay, here's
I
another
will,
great
t- I
question.
will tell you there are some areas of the county that, like the city of Dallas is in Collin County. The Dallas tax collector collects for the city of Dallas, but I collect for the county of Collin. So you'll get a bill from me and one from John Ames. If
Yep, that,
you live in Frisco ISD, I collect for both of those entities, but I collect for the entire entity. But if you live in the Denton County side, you will get a tax bill from the Denton County collector for the county taxes, but you'll get a bill from me for the city and school.
Yeah, so where I grew up, we lived in the city of Dallas in Collin County in Plano School District. So it can get really confusing really fast. All right, next question. If you recently purchased, is your closing statement with the sales price proof enough of market value?
It depends on how close to January 1st it is. Um, you can use that, but just remember that when the appraisal district sets their market value, it's supposed to be as of January 1st.
I would recommend bringing that, but also bringing comps.
Right, right. I mean, they a lot of times they will change it to that, but they also they can counter that by saying it's not close enough to January 1st to make the adjustment.
Yeah, I've done a lot of protesting in Oklahoma myself because I have yet to find a company I love up there for my protests. And they have been very good every time about doing it to the purchase price. I have not had that same level of success with Texas, but they often do. Next question. I recently built a new property and we moved into the home in April of 25. How does the homestead exemption work when moving mid year? My prior primary residence was in Frisco and current residence is in the colony.
Um, as far as your exemption, I guess it depends on what exemption you're talking about. If you're talking about like an over 65 exemption, your exemption will move based on a percentage. Your percentage of, if you, I'm just going to use nice round numbers. If you're paying 75% of what you would pay without your over 65 exemption, then that's what your exemption will move to your new property. If you're just talking about a standard exemption, um, it will move just, it'll be a prorated exemption of what you would have, which is actually something fairly new. Prior to the 21 legislative session, you got zero exemption um, until the first January in which you own the house. So it depends on which specific exemption you're talking about as far as how that exemption will be applied.
Okay. And she's specifically asking about homestead exemption.
Well, I mean, like I said, it depends on if it's just a standard homestead exemption or if it's like over 65 exemption, a disabled exemption. The rules are a little different depending on what kind of exemption. But a standard homestead exemption, prior to the 21 legislative, it didn't apply at all you until the first time you own the property as of January 1st. So like if you bought a property in April of 25, you wouldn't get an exemption until January 26 under the old rules. Now you can apply and get a prorated exemption for the part of 25 that you do own the property.
Last question. Why does it seem like appraised values skyrocket in hot markets, but they don't adjust downward nearly as quickly when the market cools? Can you explain how that's fair to investors? I will, before Scott comments on that, I will tell you that I obviously have been doing this since well before the Great Recession of '07 to 9. And we did see them adjust downward significantly. And even during COVID, we saw some ticking down when it was slow and then ticking back up after. And the last couple of years, I've seen them be very, very fair compared to what I think they could have done with the values skyrocketing. So that has not been my experience across the few hundred properties, plus maybe 1,000 for a client that I monitor. But Scott, I'll let you speak to that and kind of what your thoughts are on that.
Um, we haven't, I haven't, we haven't seen the market really slow down here since kind of got real involved in the property tax and the appraisals here. So by statute, it's supposed to be what the market supports. So um, I will say that while I don't agree with everything that our appraisal district does, I think they do a fairly decent job of following the market, and I would expect them that if the market takes a severe drop, I would expect them to follow suit.
Yeah, I agree. So that is all of our questions. Scott, I thank you so much for being here today. I just really, really appreciate it. For those of you that want to stay up to date and be able to ask expert questions, I strongly recommend you join our free Facebook group, Wealth and Rentals. I'm hoping that I can convince Scott to come be one of our experts on there. But we talk a lot about what's going on in the market, not only here local, but also nationwide, what we're seeing from property taxes to legislation to just lots of different things that affect us all as homeowners, not just investors. And we've got something like 17, 1800 people in the group. So it's a good group with a lot of movement and definitely just a great free resource with lots of experts in that group. And again, Scott, I just want to thank you so much for coming on today. I just thank you for taking your time. And, hopefully you'll get some great questions on the back end of this as we have so many people that are going to watch this not live. But I appreciate everyone who watched live being so engaging and taking your time to watch this with us.
Thank you.
All right, everybody, take care. Have a great rest of your day.